Hi there. A common question that comes up amongst brand new traders wondering whether something is a dip buy or whether it's a short. And I think that's such a good question because when you look at just indicators and you don't really look at connecting the dots between indicators, it can get very confusing at times. And I hope with this little video recap, I can hopefully close the gap a little bit for you. Of course, all this is opinion based. Okay, so don't just go and start doing this. I have to say this because if you take losses, you have to realize it's still your responsibility. But in my experience, historically, here is how to differentiate between a dip buy and a short sale. Perfect example is on CLOV. Okay, and what I usually like to spend time with when I'm using technical analysis. I don't think technical analysis is the end all be all of trading. I do think that too much emphasis is placed on technical analysis by a lot of quote unquote gurus on YouTube, Reddit, and so forth, or Twitter when they're posting their charts. But one of the things that I do like about tech analysis, when I attach it to fundamentals and key statistics, is the relationship between EMA 5 and EMA 20. Now, if you've been trading for a while, you've obviously heard about crossovers in the past, and you could have bearish crossovers between the two periods and bullish crossovers between the two periods. That's fine. But I think one of the important things to differentiate in a difference between a dip buy and a short sale in a scenario like CLOB, where the stock has been, almost 140, 145% of the float has been shorted, you know that this is almost as good as a good catalyst. Like, sometimes you have no news, but all you need is just a massive short sale interest and a stock can run. So when you see a 5 versus 20 EMA, and this is the first time where you see this sort of do this, right? Like the 5 is the light green line, and the red and the purple is the 20. You can see that the 5 is staying up and above the 20 the entire time until about this point in time where the 5 is crossing underneath the 20. Okay. Now, for a lot of people, when they see this, they call this a bearish crossover between the 5 and 20 EMA, and that's their indication to get out. That's where people start thinking about the fact that this might be the beginning of the end. Okay. Um, and you can see the same thing happens over here where the EMA 5 crosses over the 20, but this time the stock actually does downtrend and continues panicking. So why does the stock go up here and why does it go down here? Okay, at the end of the day, really nobody's going to be able to tell you the exact reasons as to why. But as a trader, what can you use to spot higher odds in an entry? When you see an EMA 520 crossover and it's occurring with a scenario like CLOB where you have massive short interest and that crossover happens usually right in the tail end of the morning towards midday where, typically at 12 o'clock, you have one of two outcomes. People either start buying or selling stock as that's lunch hour. It's something that a lot of people know. Volatility can happen midday. And when you see that the crossover is occurring on very reduced volume, which you can see right here, like right from the start of this at 11:30, look down at the volume bars, and you can notice how the crossover is not really a convincing crossover. It's on very light volume. Oftentimes, this is actually a setup for a dip buy, especially when the crossover can coincide with a technical level like VWAP, which is the volume weighted average price. You can go and learn about that on YouTube, or you can go and check it out on Investopedia, or if you want, we go into detail about it in our courses as well. But basically, when you have that VWAP test on a 520 EMA crossover, on reduction of volume, on a stock that's been shorted heavily, this is a potential long setup. Okay? And this potential long setup, if it doesn't work, the question becomes, well, if I buy this dip here, how do I know for sure that this is going to bounce? You don't. You don't know that when you get out of your house at the end of the day that you're not going to get smashed by a piano falling from the sky either, right? But that's where you rely on risk analysis, and in this case, you have a technical level generated and that technical level is coinciding with the VWAP. You see this sort of 860 area that was tested before? When that coincides VWAP, that can be a very attractive place to risk off the stock. So in this case, you could enter here when you get the crossover on reduction of volume. Usually I like to give it 10, 15 minutes before I buy anything when a trend has been set. And then, off you go. In this case, it worked out. And if it doesn't work out, you're so tight to where the VWAP is that, okay, so what's the worst that's going to happen? You take, let's just zoom into this so I can put this into perspective. This is the understanding of risk reward and learning to apply that to your trading. If you get into the entries somewhere here, right? Let's just say you don't time it perfectly. Let's say you time it a little bit too early and you got a little bit of FOMO going on. You get in up here and you have to weather some losses. You're taking a 2%, 1.73% loss to play off a VWAP versus a reward that ended up being 15%. Right? So you take 15 and divide it by 2, and what do you get? You get a 7 to 1, roughly, right? Okay. So this is why, yes, it is possible to make a lot of money from the stock market. Yes, it is possible to lose a lot of money, but who loses in this game? The person who does not manage risk. The person who arbitrarily buys based on emotions. The person who does not stick to their risk levels. If you keep the losses small, then your profits will always trump the scenario of your losses, okay? And what I mean by that is, let's put this into perspective, okay? So we have 253 trading days in the year, right? And that's if you're a full-time trader. If you take 2% losses, time over, right? That means that you're going to be sitting somewhere around 600% loss if you lose every single day, every single trade, right? And that's where a lot of people, they look at that and they say, well, if I always lose, then I'm going to lose all my money, right? But the reality is that because the stock market and the market makers run price action based on the rule of randoms and algorithms, you're not really ever going to have a 100% loss ratio. And if you do, it's because you're probably doing something psychologically in a consistent manner that you need to correct. Most beginners, most people who don't know much about the stock market, you'd have to try really hard not to have 20% win ratio. That would mean that out of 100 trades you take, you lose 80 of them and you win 20 of them, just because the rule of randoms alone, okay? And if we take that scenario and say, okay, so let's say you're a horrible trader and you only have a 20% win ratio. That would mean that 80% of those 253 days, trading days, you're going to be a loser, okay? Let's do some math here. So 253 times 80% of those days means that 202 days of the year, you're going to have losers. And that's going to equate to 2% loss, right? Because if you play with tight risk reward like I just showed you here, that means that you're taking a 404% loss from your account. This is just your losers. On the winners, you also have 253 days, and you're going to have 50, let's just call it 51 days where you are winning. And on those 51 days, if you don't get greedy and you can stick to your, 10%, 15% consistent profits, okay, then let's just do 10%, right? It's 510% in profits. Minus 404, I think it was, in losses, you're still returning 106% of your account by year's end. Okay? Where this gets mathematically certain is if you start taking losses that are just dumb and they're emotional and they're based on no actual technical, no actual fundamental, no actual quantitative research, nothing. You're just sitting there holding and hoping because you don't know what else to do. That is what implodes an account. That is why 90% of people lose. Okay? Financial freedom does not come from a setup where you're making decisions out of fear and greed. Financial freedom, especially in the stock market, comes from your ability to, first of all, be educated, second of all, master the psychology behind why you take decisions, why you make certain decisions, and learning to turn those around so that you can find consistency in the stock market. Okay? So just something to show you here. And this is if you're a horrible trader, right? If you're an educated trader, somebody who goes through a course of somebody who is able to teach you something. Listen, not even me, but anybody who can teach you to trade sustainably. Typically, your win ratio will start up into about 40 to 50%. Like half the time you're right, half the time you're wrong. Okay. Um, and in that half time, well, then let's just do some math here. So half time of 253 is 126 days, right? So 126 days, and you do that at 15%, you're looking at 1,800, 1,900% returning money. And there's those exact 126 days where you take 2% loss. Let's just say you're a bit more sloppy, you take 4% loss, right? You can afford a higher loss percentage when you have better win ratios. Minus 1,890, you're still looking at 1,300% return on your account. So, that's pretty decent. Okay, so 1,300 divided by 100, what is it? 13 times, right? So that means that you take a $10,000 account and you do it 13 times, then you turn it into 130 grand by the end of the year. Okay, there is money in trading. Okay, it's just it's been given a bad rep. A lot of gurus are out there. I think 2020, a lot of people were successful in the markets, so they thought that, well, look at me. If I can make money in the markets, I can make some money teaching this as well. And the reality is that most people who made money in 2020 by just riding the wave were just absolutely lucky. They don't actually know what they're doing, and now they're selling courses and creating YouTube accounts and sucking in a new wave of beginners who are just believing their astronomical results as something that's sustainable. No, I want you to talk to people who've been in this game for 5, 10, 15 years and see what they have to say and what their approach to the market is, even when you've got hot sectors like 2020 was, and even the beginning of 2021. Those are the ones you want to learn from. And at Omnificent, we make a point of not trying to sell you our courses. For us, what's important is that you learn through our free material, and that free material either convinces you to go further with us or not. Okay, that's the beauty of being real in this game. When you're real in this market, and when you're able to make money trading yourself, you don't need the business angle, but you offer the business angle of teaching for anybody who actually wants to learn this. Okay, and we have testimonials on our website. We have clients that go on video and tell you how they're doing. Some people came in with some training experience, some people came with no training experience. The results are still consistently good. Okay, but a lot of this has to do with staying disciplined, staying educated, and getting information from a good source. Okay, so that's the Friday little video lesson. I'll do this one for social media and for the public view. If you want to, if you want to learn this stuff and you want to come into our platform, okay, I'll show you how you can do that as well. And you can go about things a couple ways here. You can click begin your journey if you want. I'll add that extension. You can come down here, watch some inspirational videos, find out about who it is I am. You'll see a backdrop of a flight deck here. I fly for a living professionally, and I fortunately, unlike a lot of my peers who lived outside of their means, I've had the luxury of being able to have a fantastic 2020, 2021 because I've got a skill set to fall back on where money was my backup, not having a middle class education that was still going to push me back into a seniority based job. Flying is a hobby for me, which allows me to trade around the world, travel the world, live the life that I want. And that's not all I do. I do some other things that are pretty cool as well. So you can find out about who it is I am if you're interested in my story. I don't think that is necessarily the highlight of the website. What I think is the highlight is you understanding how a regular Joe, who was an immigrant in a North American country, went from nothing to everything. That is the inspiration that I want to pass on for anybody who actually wants to learn it. And then some FAQs. Click get started. You have a 2-hour webinar. It's 2 hours and 11 minutes. It's absolutely free. After that, if you decide to move ahead, you can come down and you can join us on our live session. I'm going live on April 27th to talk about what it is I do, what it is that works, and answer a lot of common questions that I think people who have an interest in trading always think about, but they are always they're not sure who to go with. and even when they decide who to go with, what should they be looking for in order to find success with the platform. So I spend time with you live and answering your questions. So make sure you take advantage of that. Okay, so next one is on April 27th. If I click on event details here, it'll bring us here. So 27th of April, live Q&A. I'm in the Mountain Standard Time, so 7:30 p.m. Mountain Standard Time. On April 27th is when I'll be live. What else? We got some testimonials here from clients that have worked with us. They're all very, very happy. Some FAQs that I answer, about an hour and 40 minutes worth of FAQs. You can come and learn about those here. More reviews and all that. Okay, and then for you, you do have a free course. So if you do want to come and see if you know how we work and if this is something you want to learn, I don't believe in money back guarantees. I think that money back guarantees are the easiest way to scam people out of their money. Instead of money back guarantees, I'm just giving out my content for free, and then if you don't pursue it further, then I guess there's a reason for it. But at least this is kind of like a trust building exercise between you and I, so we can build a relationship and see if this is something that you want to pick up. Okay, if you've got questions, just click on contact and send our group an email, and somebody from our admin team will get back to you. Okay, so have a fantastic weekend. I'm going to probably close up my short here on what is this, on CLOV. Yeah, I'll take a short here. I'll just cover this up right now. Click buy 500. I'll just do it in market. Having a good short.
Order partially filled.
There we go. So we're filled at 859 remaining of our shares, $781 profit today. I'm very, very happy with that. And I'm going to go and tee off for some golf now. It's beautiful here in Vancouver, British Columbia, which is where I'm on a quick business trip. And go and play some golf and celebrate a fantastic $800, sub $800 US profit day. Okay. All right, ladies, gentlemen, anybody in between, have a fantastic weekend. We'll see you later. Bye-bye.